Thank you very much. Thank you. Good afternoon. Thank you very much to the BIS Innovation Hub for inviting us to join in this exciting summit. So this session, we are going to focus on regulatory lessons from the crypto winter. What a year crypto assets and markets and activities have experienced. About a year ago, we have had the failure of the Terra Luna stablecoin, the collapse of the asset. And then later in the year, we have the collapse of the FTX platform, the major exchange. And of course, recently we have the folding up of the Silvergate, the bank that provided banking services to crypto ecosystem. And we have a lot of lessons to learn from these episodes. And of course, we have no better person other than Steven Major, who is an executive member of the Netherlands Bank. And Steven, of course, also has the special role of chairing the crypto asset working group under the Financial Stability Board. Steven, I think the FSB has launched a major consultation report on the international regulation on crypto assets markets and activities. And you are going to finalize the recommendations. At the IMF, our board also endorsed a staff report on elements of an effective policy framework for crypto asset activities. But of course, our approach, very similar to the FSB, the spirit is to regulate. And of course, we also have views out there. The question posed is really, should we let it burn? Wouldn't that be the preferred approach? Are we actually giving undeserved legitimacy to crypto assets if we start regulating the entities in the ecosystem? Maybe we can start from your thoughts, on this one, to have your thoughts, Steven.
Absolutely. Thank you very much, Dong, for that question. Also, many thanks to the BIS Innovation Hub to have the opportunity to speak here today and also to talk about crypto assets and stablecoins. We have talked so far about the CBDCs. And I think it's fair to say, to some extent, the CBDC started off after we had the, let's say, the first stablecoin attempt. I think that really drove the development and the thinking about CBDC. So I think, although they are very different, it is important to talk about both topics. Maybe first and you said it very pointedly, is let it burn. And to some extent, I must say it would be a very attractive option because, and although we argue, and personally I also argue, is that we would need to bring this under regulation. We need to bring this under supervision. There is also this element of giving some credibility to the sector once to start to supervise and regulate the sector. I think for me the key argument is to say we need to go on a direction and a path of regulation and supervision. It appears to be very persistent. Although we have seen a crypto winter, it is clear this is here to stay. I have seen continued interest from, let's say, first from the investors, the consumers, and we have also seen a continued interest from the, let's say, the traditional financial sector to get exposure to crypto assets, to be involved in stable coins. And of course, it's still very uncertain how it would be, but you can see that there is this drive to be involved. And ultimately, I think that is by market participants an assessment of the potential innovation in the sector. I must say we've seen a lot of problems in the sector. We have seen a lot of areas where there was detriment to investors, detriment to consumers, but to some extent I think it's not to us as regulators and supervisors to judge, is this going to be a successful innovation? Is this going to be a successful new digital development? But we need to give the framework at the same time trying to control the negatives of this innovation. I think so far, and the FSB, as you said, and we'll get probably to that later on in the conversation, we have issued these recommendations. So far, it is not been relevant from a stability perspective, and I think to some extent we have seen that. There's been the crypto winter, there's been these failures with limited direct impact on the financial system. I know there was some connection in the recent weeks, but I think fundamentally these were not crypto issues. It was a little element in the developments, but I don't think it was the core problem that we have seen in the past weeks. It's right, to some extent, when you start to regulate and supervise this, you give some credibility to the sector. We are preparing, in the Netherlands, we're preparing in Europe for starting to regulate and supervise this. This is as you probably are aware, this is MiCAR. And we have said to ourselves as regulator, and to some extent we have also said it to the public, is that we'll always continue, at least for the medium term, this will continue to be an area which is higher risk than the traditional financial sector. So we're not shying away as regulators. We should regulate this, we should supervise this, but I think it's also fair to say is that at least for the years to come, this will be, this will be higher risk. We will give some level of legitimacy to the sector. At the same time, we have this expectation that there will be one point in time it will become more important, will become part and intertwined with the financial system, and then it's better to regulate and supervise.
Thank you, Stephen. I think from the IMF's perspective, we have a very large number of member countries, universal membership. For a lot of emerging markets in smaller countries, there are also important macro financial implications of adoption of crypto assets, right? That these affect how monetary policy is transmitted, affects financial stability, and also fiscal issues. Are these being used as instruments for tax evasion? So all these, I think, to us, is an important subject that we cannot just let it burn. There has to be a policy framework to deal with the various risks. But coming to the risk, how do we deal with the risks? I think the spirit behind the FSB international framework, the proposed framework, is same activity, same risk, and the same regulation. That's the spirit, that's the principle behind all the recommendations. I think that's a very sound principle. To the extent we can classify all the activities of the crypto space and the risks into the framework we have now, right? So the question is that, can we actually do that for the crypto activities? Can we classify them, bring them into the existing regulatory framework and apply the same regulation? Or to put it differently, can we really believe that crypto assets, or can we take a technology neutral or agnostic view towards crypto assets? Or do these new technologies actually bring new risks that are not captured by existing frameworks? Maybe I think that's a question that's being on the mind of many, many regulators. Would be very interested to hearing your views.
Well, maybe the answer probably is going to be a bit ambiguous, how do you say, two-folded. So first of all, and I think that is clear, as we have seen also on the CBDC discussions in the previous sessions, you can convincingly make the argument is that crypto assets and stablecoins are in an innovation, they are a new development, and so the nature of that development is different from what we have had in the past. On the other hand, if you look at the type of issues that we're confronted with, they are quite traditional issues. We have seen the collapse of the FTX, and of course this is based on public information. You have seen very classical issues at play that we to some extent solved and addressed in the traditional financial world, traditional financial system. The fact that you shouldn't mingle customer accounts, customer resources with your own resources of trying to develop a business. It's an age-old mantra in the traditional financial system. There's a high risk of investor detriment if that is not solved, and we have seen it playing out. we have also seen it out, and as you probably are aware, you know, I've been a securities regulator in the past. The fact that you can trade and also take positions in instruments, and at the same time, you know, be taking a position as, let's say, as a market maker, but also offer the exchange, that you combine those functions. These are typically situations of accidents waiting to happen, where there will be problems for investors. And so, in essence, the underlying risks are quite similar, and that is the reason that we have said same risks, same regulations, and in that sense also we need to be not to be, let's say, get distracted by this idea. This is going to be a fairy tale world where suddenly self-interest doesn't apply and where there's not going to be any accidents. This needs to be a properly regulated and supervised world, and that is also, if you go to the recommendations that we have developed as the FSB separately for the crypto assets and for the stable coins, they are quite, you know, standard kind of regulatory considerations that you expect, like proper governance, taking into account, making sure that there are proper supervisory tools, that there is supervisory cooperation. And so in that sense, the substance of the recommendations will to some extent not surprise you, because also we think that in this world of crypto assets and stablecoins, that you need to have some similar regulatory and supervisory principles as we indeed have in the traditional financial system.
Right. So Stephen, you know, in the Netherlands Bank, you have recently fined 2 service providers, I think 3.3 million euros, if I remember correctly, for not having registered their services. Nonetheless, they are providing services to the citizens in the country. I think this is going to be a problem for many other countries, in the sense that crypto assets by nature are really cross-border. You know, they are borderless, and they are, you know, by nature could be anonymous, so the service providers can be located anywhere. Actually, I think my colleagues in the Monetary and Capital Markets Department in the fund, we did some calculation. 80% of the crypto assets service activities are provided by service providers located in the so-called offshore financial centers. And of course, you can market your services across the globe, you know, using the internet. For a smaller jurisdiction, it's very hard for them to find some of the big service providers. Let's say how to ensure compliance. So this points to the broader issue of international collaboration, of regulatory enforcement. How do we regulate activities that are international by nature? What are the means of collaboration? What about the jurisdictions that don't necessarily adopt the FSB standards, right? Maybe they have capacity constraints, they have a different regulatory approach. So how do we ensure consistency and have a globally coordinated approach to crypto asset regulation in order to prevent regulatory arbitrage? You know, I think, you know, maybe your thoughts on this question?
Well, maybe first on the, without going into, as you said, this is public information around the fines for the 2, let's say, global crypto players that were active in the Dutch market. And of course, there is an issue then, because in principle, you know, every global crypto player can be accessed by an investor or a consumer, and so there needs to be this link between that there is evidence that actually they are providing the services to the let's say to your jurisdiction, to the locals in your jurisdictions. First, maybe on this issue of non-compliance, because it's also part of the recommendations that we have consulted upon as the FSB, is that we also recognize that there are non-compliance issues generally within the sector. the level of non-compliance varies from jurisdiction to jurisdiction. For example, in some jurisdictions there are some different definitions around when is it a security or when is it a deposit, etc. And so whether there is non-compliance or whether you need to have new dedicated rules and regulations will also depend a bit on the existing, let's say, legal framework that you have. I find it very interesting that there was quite some attention to legal issues in the previous sessions. So in addition to that, there is indeed the point of global cooperation. Obviously, what is important, and that is also what the FSB is saying and will continue to say, it is important once we finalize the recommendations before the summer, that is our plan, that is our intention to finalize them before the summer, is that jurisdictions across the world should implement them as much as possible. And so that is important. That is, let's say, the first line of defense, making sure that they are implemented as much as possible, those recommendations across the globe. We have heard various stories. There's already been some jurisdictions that have implemented dedicated rules and regulations for crypto assets and stablecoins. Depending on your regulatory system, they may already be covered to some extent, and so, but that is the baseline, is to make sure that the recommendations are implemented. At the same time, of course, there is the issue is that there may be some incentives for some smaller, lightly regulated jurisdictions to maintain their stance and trying to attract some crypto business. And I think we need to think about how to go about that issue. I think it's not sufficient to just stay and continue to make the point, you need to implement this. I think one way to look at this is to say, well, maybe you should take into account that, let's say, in your jurisdiction, that the jurisdictions that implement those standards, they can only allow their traditional financial institutions to get exposures to crypto assets and stablecoins coming from those jurisdictions where they are regulated. And so, of course, we have seen these mechanisms also in other parts of the financial system. There are some ways to address issues with jurisdictions that are not willing to implement rules and regulations, and to find some mechanisms. I think we're in the middle of thinking about that. We had some discussions on that in the FSB. We haven't finalized our thought on this, but clearly, for me, it's clear that just saying, implement these rules and regulations is not going to be sufficient. We also need to have some mechanism where, for example, you limit the opportunities for the traditional financial sector in regulated jurisdictions to get exposures to crypto assets and stablecoins from those jurisdictions that do not implement regulations. Maybe because you raised that in one of your previous questions, we are also very recognizing the issue around, for example, stablecoins having a bigger chance of, let's say, being successful in some emerging markets, developing economies. We recognize that the attractiveness of stablecoins will vary also. To what extent is it easy in your jurisdictions to exchange money, exchange currencies, how much cost is involved, how efficient are payment systems, and we can see that stablecoins can be more attractive to emerging markets and developing economies, because there are, it might be more expensive to get a currency to have remittances, for example. And so one of the issues that we also want to focus on or give attention to is precisely these risks around stablecoins and the implications for emerging markets and developing economies. At the same time, I should also say we always look at the stability angle, and so I can see the issues around perspectives from monetary policy, perspective from fiscal policies, money laundering. They're all very important, but from an FSB perspective, we focus on the stability side.
Right. Thank you. So just on the macro-financial aspect, for a lot of IMF member countries, of course, capital flow management is still an important toolkit in managing volatilities associated with cross-border capital movements. And one reason that crypto assets could be a concern here is that they could bypass some of the traditional control points in terms of capital flow management. So what are the channels that these measures can be circumvented? And that's something we also are studying very carefully in the fund. And what are the mechanisms we can close these loopholes? There's some similarity to the thinking here as well. So that's an ongoing challenge, I think, to a lot of the member countries. Just to follow up a bit on the FTX failure, you mentioned that we have seen the development of this very large multifunction service providers. So what are the lessons we can learn from this episode? But more broadly, there is an interesting question in terms of the crypto asset itself, because we have thought that blockchain really allows for the possibility of a decentralized setup, right, for financial services. But the trend we have seen is really a centralization. We have seen out of these activities the growth of very large firms centralizing services. So, two questions. One is more specific in the sense that what we can learn from the failure of this big service provider. And secondly, going forward, looking in the future, what's your thought on the various sort of the underlying development of crypto assets in terms of, the so-called trilemma in blockchain, right? Do we have a sort of trilemma in terms of decentralization, security, and scalability? Is it really sort of because the technology has not developed to the extent that it can be scaled up without being centralized? In the sense that the fact that we have seen so much centralization of services is a reflection, probably the technology has not developed to such an extent that allows it to be scaled up without centralization. I don't know. These are some of the thoughts that are still being debated.
Well, maybe still going back to the point that you mentioned at the beginning of your question around the issue that stablecoins or crypto assets may become important in emerging markets. Developing economies, where personally I could very well see is that at least you want to have the information exchange and the supervisory cooperation is, for example, is that you can know at least as a jurisdiction if there are instruments or stablecoins or crypto assets active in your jurisdiction, is that you get information from the home regulator or the home supervisor, and because you want to know how important is this, what is the scale, and so I think at least you would want to have their solution of information exchange. The whole thing on decentralization, and again, I'm as a regulator and a supervisor. I'm by nature I'm a bit skeptical, and it's interesting to see how extremely centralized this world is. There's actually not so much decentralization. I know this was at the origin when going back to 2009, 2010. That there was also a philosophy of we shouldn't have. We need to have money. We need to have coins which are not part of a governmental system, and therefore we need to develop crypto assets, bitcoins, etc., to take them private. Well, first of all, and you wouldn't surprise me, although I'm responsible for banking supervision, working at a central bank, I'm convinced, and it was exchanged in the previous panels, about the importance to have the public interest embedded in our financial system, in our payment systems, and I think what the FTX case shows is how centralized this is and how important key players are in this market, and of course. We know, and I know that some of the people in the sector say, well, but that is the reason it was not successful, that it was so centralized. Go to the true DeFi, and when we are really decentralized, all things will get, this will be addressed. I think it is in our, and again, as I just said, we can see that there can be innovations in the sector. There is a chance. We should give that the room for that. We've seen a lot of problems in the sector, and to some extent a lot of problems related to this concentration issue. The fact that you can be both a trading venue and taking a position and taking custody is creating risks in the sector. And so I am pretty optimistic that ultimately, and that is having the supervisory hat on, that ultimately we will find a person or an organization to regulate the sector, because there's been concerns around, if it's so decentralized, can you properly regulate this? I think we need to be creative. There needs to be thinking about where the anchor points would be to regulate and supervise. We have the same type of creativity and innovation in the traditional financial sector, because, for example, now in the EU, we have decided, we also talked on issues like cybersecurity, is that we also look at suppliers and supervise, let's say, key service providers to the financial sector. I think it is also possible to properly regulate this sector. It will have a different structure, but ultimately, I think there will be the possibility to find the key players and link the supervision to make sure that we can effectively regulate and supervise.
Thank you, Stephen. I think we have just over 3 minutes. Maybe I can open the floor to 1 or 2 questions. I don't know whether any colleagues in the audience. Yes, we have one hand up over there, please.
So my question is about the implications of greater regulation on the crypto ecosystem, its implications for the degree of integration with the traditional financial system. So on the one hand, one could think that greater legal certainty could increase this integration. But on the other hand, to the extent the ecosystem derives its existence from regulatory arbitrage and lack of genuine use cases, then this could lead to lower integration. So what are your views on the way forward from here if we regulate it more strongly?
So the very, very good question on the, as we have seen so far, the level of integration has been limited. As we have seen how the crypto winter has developed, of course, there's been very painful damages for individuals that had invested. Although, for example, the information in my jurisdiction is that there were a lot of people involved, but most of the people in quite small amounts. Understandably so, I think regulators across the world have been quite strict on getting exposure for the traditional financial sector to crypto assets and to this new development. You're probably aware of the Basel Committee standards that are quite strict in terms of the capital levels that are required. I think a possible outcome of regulating and supervising the sector, and as I just said, we hope that it will happen based on the recommendations that we have issued, that will gradually increase. But as I said, as it's regulated, I think that is a development that you could expect, and so. That is, I think, part of the future development if there's innovation that passes the use case, where there's relevant benefits to the financial sector, and I think part of the result of regulating and supervising this will also is that the interlinkages will increase. But of course, we will be very careful. The Basel Committee has been careful on this, to make sure that it will not have negative consequences for the traditional financial sector.
I have one hand over there. I think that's the only one we can accommodate given the time limit. Thank you.
Can you hear me?
Yes.
Yeah, but I think the people that are listening remotely probably know.
The important is the answer, not the question. Thank you. My name is Amnon Samit. Short question to Stephen. What is your attitude towards local community money, local community coin or community digital coin, Like Amsterdam is considering, Ireland, I think, has already such a coin. What is your, as a national bank, approach if communities will develop local CBDC? Thank you.
That is very. Actually, you know more about the Netherlands than I know. So I hadn't. I wasn't aware of these developments. To some extent, you're moving to my central bank side, and it's a little bit out of my comfort zone, as I'm responsible for banking supervision. I guess my people on the central banking side would say that, you know, as long as that stays small and limited, there are these options to have that. I guess they will start to be more concerned once it starts to be bigger.
Thank you very much, Stephen, for sharing these thoughts. And
thank you very much, Don.
Thank you very much.